Everyone's chasing the next big stock, but what if you're overlooking the most accessible path to significant wealth? While the headlines scream about mega-cap volatility, a rare window has opened for savvy investors. We've pinpointed 8 high-growth companies under $25, each backed by substantial hedge fund interest and positive analyst ratings, that are primed for explosive performance. These are the overlooked champions in essential sectors, offering a unique chance to invest like the pros without breaking the bank. Don't let these opportunities slip through your fingers. First up, we have SailPoint, Inc., ticker SAIL, a leader in enterprise identity security solutions, unifying identity data across a complex ecosystem of users, machines, and increasingly, AI agents. With 27 hedge funds invested, SailPoint is gaining significant analyst attention. Evercore ISI reiterated a buy rating with a $29 price target, while BMO Capital maintained a buy with a $25 target, emphasizing SailPoint's pivotal role in the expanding AI landscape. Analysts applaud its product announcements designed to enhance upsell and cross-sell opportunities, directly leveraging the AI trend. Its unique Atlas platform, capable of managing both human and agent identities, is highlighted as a distinct competitive advantage. Governing over 125 million identities, SailPoint boasts impressive scale, and its latest innovations like agent identity security further solidify its market leadership. Is SailPoint's deep integration with the AI revolution the key to unlocking significant future growth and market dominance? Haleon plc, ticker HLN, is a global consumer healthcare powerhouse, providing a vast array of products across 6 major categories, from oral health to pain relief, and is on the radar of 30 hedge funds. Jefferies recently reiterated a buy rating on Haleon, setting an ambitious price target of £440. This optimism stems from several key growth catalysts: easier sales comparisons in Latin America, a positive impact from innovation across Europe and emerging markets, and stabilizing trends in North America. Analysts now project Haleon's organic sales to grow at 3.4% in FQ3 2025, with that forecast climbing to 3.6% for FQ4, anticipating an acceleration of growth into 2026. While Barclays maintains a more cautious hold rating with a £380 target, the bullish outlook from Jefferies highlights significant upside. Can Haleon's diversified product portfolio and strategic market initiatives drive robust, consistent growth in the competitive consumer health space? Informatica Inc., ticker INFA, stands at the forefront of enterprise AI-powered cloud data management, providing its intelligent data management cloud platform and drawing investment from 35 hedge funds. As a key Oracle partner, Informatica recently announced 4 transformative integrations on Oracle Cloud Infrastructure, a strategic move designed to bolster its market position. These new solutions are tailored to help Oracle customers seamlessly unify and manage master data from both Oracle and non-Oracle sources, a crucial capability in today's complex data ecosystem. The integrations include a blueprint for agentic AI on OCI, IDMC-MCP server support, master data management capability on OCI, and Informatica's Intelligent Data Management Cloud on OCI dedicated region. According to Informatica's GVP, these innovations offer Oracle customers a rapid pathway to high-quality, trusted data essential for AI across diverse cloud environments. Now, before we go into further details, I want to give a quick shout-out to Snowball Analytics, the simple and powerful portfolio tracker for retail investors like you and me. If you've ever struggled to keep track of your stocks, funds, or even currencies, or if you've got spreadsheets all over the place trying to figure out how much you actually made, this is for you. Snowball Analytics brings all your investments into one simple dashboard, so you can see your true portfolio performance, automate your dividend tracking, and rebalance with just one click. The best part? You don't need to manually input anything. You can connect your broker securely through Yodlee, and all your transactions, holdings, and income will sync automatically. That's right, no more messy CSV uploads. Inside your Snowball dashboard, everything is organized neatly. Your portfolio is split into categories with target allocations based on your goals and risk profile. You can track everything from stocks to custom assets like rent or deposits. And there's a full dividend analytics tab that shows your expected annual yield, monthly payout forecast, and even your after-tax returns. I've been playing around with it, and it's genuinely powerful. You get to see which assets are really pulling their weight in your portfolio, how much you're earning in dividends, and where you might want to rebalance. It's basically your personal investment control center, built for people who want data-driven decisions without the headache. So if you want a smarter, cleaner, and more automated way to manage your investments, check out Snowball Analytics. The best part? I managed to get a special discount for you all. You can get it right now by clicking the link in my video description or the pinned comment below. Huge thanks to Snowball Analytics for sponsoring this video. And now, let's get back to the content. Will these critical integrations solidify Informatica's competitive edge in the rapidly evolving AI data landscape? Roivant Sciences Limited, ticker ROIV, is an innovative biotechnology company dedicated to accelerating the development of critical medicines, currently backed by 54 hedge funds. Wall Street's opinion on Roivant is notably split, following promising Phase 3 VALOR study results for brepocitinib in dermatomyositis. While JP Morgan reiterated a buy rating with a $20 price target, Bank of America Securities maintained a hold, setting a $16.5 target. Bank of America analysts, while acknowledging the trial's success, temper expectations, anticipating a limited referral center launch that could initially constrain growth. Furthermore, concerns linger regarding the competitive landscape for IMVT-1402, targeting Graves' disease and other autoimmune conditions. A significant catch involves ongoing LNP litigation against major players like Pfizer and Moderna. Adverse outcomes could materially impact Roivant's financial standing. Can Roivant navigate both market competition and legal challenges to deliver on its pipeline potential? Teva Pharmaceutical Industries Limited, ticker TEVA, is a global pharmaceutical giant specializing in generic, specialty, and over-the-counter products, counting 57 hedge funds among its believers. The company recently saw a positive adjustment from Bank of America Securities, which raised its price target from $22 to $24, while maintaining a buy rating. Analysts, after previewing Q3 EPS estimates, don't anticipate any major surprises, either beats or misses, for the quarter, citing stable pricing and volume trends for key drugs. Looking ahead, Teva released its AID memoirs, setting expectations for full-year revenue between $16.8 billion and $17.2 billion, which translates to a 2% to 4% increase year-over-year. This outlook aligns closely with general consensus, indicating a period of stable, predictable growth for this pharmaceutical player. With a strong presence across diverse drug categories, can Teva's consistent performance translate into sustained investor confidence? Moving to the tech sector, Hewlett-Packard Enterprise Company, ticker HPE, is an international edge-to-cloud powerhouse, a name synonymous with enterprise technology and held by 60 hedge funds. HPE recently captured Wall Street's attention, topping FQ3 2025 revenue estimates, signaling strong operational momentum. Citi reiterated a buy rating with a $28 price target, despite a recent dip in share price following conservative fiscal 2028 EPS guidance. Citi analysts view this guidance as a wise and conservative approach, especially for the networking segment. While networking growth is projected modestly, it carries significant potential for acceleration as HPE doubles down on data center switching, a critical component for AI infrastructure. The company's revenue mix, increasingly driven by networking, cloud, and AI, combined with structural cost reductions, sets the stage for enhanced operating leverage. Can HPE's strategic pivot to the intelligent edge and AI infrastructure unlock substantial long-term value? Next up, we have Pfizer Inc., ticker PFE, a global biopharmaceutical behemoth that's been a household name, now trading under $25 and backed by 83 hedge funds. Pfizer recently dropped significant news, announcing positive results from its Phase 3 HER2 CLIMB-05 trial. This trial focused on Takisa, a kinase inhibitor, in combination therapy for patients with HER2-positive metastatic breast cancer. The results were a game-changer. The trial met its primary endpoints, showing significant improvement in progression-free survival compared to a placebo, all while maintaining a healthy safety profile. Management highlighted that HER2-negative breast cancer is notoriously challenging, often progressing despite existing treatments. Takesa's ability to halt disease progression offers a fresh ray of hope in this difficult fight. With a pipeline delivering such impactful results, is Pfizer positioning itself for a major comeback story beyond its pandemic-era success? Infosys Limited, ticker INFY, is a global technology consulting giant, a powerhouse in digital services, guiding businesses through complex digital transformations. With 91 hedge funds holding stakes, it's a name Wall Street watches closely. While BMO Capital recently adjusted its price target from $20 to $18, maintaining a market perform rating, this move follows a reasonable fiscal second quarter where Infosys actually raised the lower end of its fiscal year 2026 guidance. However, analyst Keith Bachman noted a subdued demand environment, with smaller deals not seeing the expected uptick. There's a lingering skepticism about AI's long-term impact on Infosys, even as the company makes significant strides in its AI-related offerings. This presents an intriguing dichotomy: a stable player with strong fundamentals but facing some near-term demand headwinds. Can Infosys leverage its digital expertise to overcome market skepticism and ignite its AI tailwinds? Now let's pull back the curtain and look at the raw numbers that truly tell the story of these 8 growth opportunities. When we stack them side by side, some clear patterns emerge. Starting with market capitalization, we see a wide range, from SailPoint's $13 billion to Pfizer's massive $140 billion. This spectrum gives investors options, whether you're looking for a mid-cap with higher growth potential or a large cap offering stability under a low price point. Revenue figures also vary dramatically, with Haleon, Teva, Pfizer, and Infosys generating billions, showcasing their established market presence. In contrast, Roivant Sciences, while small on revenue at just $29 million, boasts an astonishing 96.33% gross margin, a clear indicator of its highly valuable intellectual property and potential for exponential growth, even if it's currently reinvesting heavily, reflected in its negative EPS. Informatica and SailPoint also impressed with gross margins in the 70s, signaling strong profitability potential once scaling is fully realized. Speaking of profitability, Pfizer and HPE stand out with solid positive EPS, while Haleon and Teva also deliver positive earnings. Conversely, Informatica, SailPoint, and Roivant are still in negative EPS territory, which is common for companies heavily investing in growth, especially in AI and biotech. For income-focused investors, Pfizer offers a surprising 6.9% dividend yield for a sub-$25 stock, with Infosys and HPE also providing respectable yields. This blend of growth and income is a rare find in this price range. So these are 8 compelling growth stocks, all trading under $25, each with unique catalysts and a strong potential to reshape your portfolio. Opportunity doesn't always come with a triple-digit price tag. Before you go, which of these 8 under $25 growth stocks caught your eye the most, and why? Drop your thoughts in the comments below. And if you're hungry for more market insights, make sure to check out our next videos right here. This content is for informational purposes only and not investment advice. Always conduct your own due diligence before making any investment decisions.